Hello, everyone. This is Software Journey with Learn to Code from Learn to Code with me. And today I'm going to tell you why I prefer to invest in Bitcoin miners versus Bitcoin. And it comes down to like a really simple answer. The idea is that it's just a better return on investment, in my opinion. Once again, this is not financial advice. I'm not a financial, accountant or in any way qualified to give financial advice, but this is just my own personal opinions for entertainment purposes. Now that that's out of the way, personally, I believe there's a better return on investment because Bitcoin miners are a leverage play on Bitcoin. I'll explain what that means in just a sec, but let's go ahead and just consider the price at the end of 2021. So that was December 2021. The price was hanging around about $45,000 per Bitcoin. Now let's imagine sometime in the future, and if you haven't seen my video, I believe that by 2025, the price will be around per each Bitcoin about 100K. And that's because it's going to be post the next halving event. So if you haven't watched that video, feel free to watch that video. But let's just leave this assumption of Bitcoin before was 45 grand, and let's say in the future, let's say 3 years from now, it ends up being 90K, right? So those are assumptions. So if you were to own one Bitcoin at that price, then essentially you doubled your money, which is nothing to sneeze at, right? That's nice to double your money. If you have fractional shares, whatever money that you put into Bitcoin at $10 turns into 20 and so forth. But I could see much more attractive gains or much more attractive return on investments if you were to invest in a Bitcoin, such as, this is just one example, but there are many that are priced very similarly. Actually, I'm going to go through a video listing what are my top picks for the Bitcoin miners, because some of them are just amazing, excellent choices, whereas others I personally would stay away from them or run away from them. But let's consider just Hive as an example. So we can see here that its market cap currently, it's being priced at 350 mil. So people are willing to buy it at that price, essentially the company. However, its book value, if you go down to its assets, it's about 430 mil. What that means is that essentially you're buying the company, you're valuing the company for less than what it's actually worth. Let's go ahead and simplify this just for the math's sake. Let's say that it's being valued at 350 mil and that it has assets or its book value of 400 mil, right? So you could think of its Kelley Blue Book as like 400 mil, right? So that's its actual intrinsic value. Now, the price to book, we could see that it's selling below its price to book. So the great thing about stocks is you can always buy it at a price, or there are opportunities where you can see according to the balance sheet, and you can kind of look at the figures and say like, hey, this is pretty undervalued. It has X amount of Bitcoin on its balance sheet, or it has X amount of miners. It has all of these assets on its book, and I'm able to get it at a steal. You can't always really say that with Bitcoin. Sure, you can say that if Bitcoin prices go down, that you're buying it at a better price, but there's no real financials backing that up, right? There's no kind of infrastructure that you can take a look at a balance sheet listing out its infrastructure and so forth. So really, it's more comfortable doing that with the specific value, with the specific company in mind. Now, the other thing to consider is its income, its net income. So we could see that in its most recent quarter, it reported about a little over 60 mil in net income. So it's highly profitable, huge margin on its operations, I believe like 80 to 85%. But we're going to make some assumptions. We're going to be more conservative with our approach as we go through this exercise, just to show you just how good of a return on investment you could potentially get. Now let's go ahead and break down its book value, its assets. Half of its assets are in actual Bitcoin, approximately half of its assets. So of that 400 mil in assets, about half of it, 200 mil, is in Bitcoin. The other half of it is actually going to be in the Bitcoin miners, the actual machines themselves, ASICs, and the infrastructure that it has. So the actual buildings themselves, some of these companies have green power or green energy ways of kind of powering their machines. So I know, for example, I believe it was I think it was Bitfarms that uses water power, right? So they have, I don't know if it's like aqueducts or whatever it may be. So that would be considered part of their infrastructure. So for Hive, it's a little bit different. But you can see that half of its balance sheet is in Bitcoin. Now, the reason why that's important is because when it doubles, like under our assumption, if Bitcoin were to go up to 90K, then we also have to take into consideration that these assets would also double in price, and that would affect its actual book value, right? You would have to actually double that. So now let's go to our next part. Let's go to our projection. In the future, sometime around 2025, when I believe that Bitcoin should be around 100,000. But for simplicity's sake, just to make this a double or a 2x, we're just going to go ahead and say it's 90,000 around 2025. Let's look at these calculations. So we first have to look at these calculations in order to understand these projections. So let's look at these calculations. The first thing is that currently to this day, and actually I should have mentioned that, is that Hive is actually the third leader in Bitcoin equivalent production. So they actually produce about 450 equivalent Bitcoin per month. And so if they were to continue roughly at that rate for the next 2.5 years, and I think this is a pretty pretty safe assumption, given the fact that they're increasing their exahash, their Bitcoin mining ability by acquiring new machines. What they're also doing is this also kind of gets offset a little bit by the fact that in 2 years it's going to halve the amount of Bitcoin that you receive, and so there is a little bit of kind of how should I say, approximation in mind, but I think this is a relatively safe approximation. So if it were to maintain for the next 2.5 years, it's Bitcoin mining productions. Once again, after about 2 years, it's going to lower because of the Bitcoin halving mining or Bitcoin halving, but I'm also not including the ramp up in production, given the fact that they're going to acquire new machines and have those deployed. So if that's the case, if that was 2.5 years from now and they consistently mined 450 coins per month, it's a simple calculation of 30 months times 450 coins per month. That's an additional 13,500 coins. Okay, that sounds good so far. Now, the next thing we want to consider is how much profit would they receive? How much pure net income would they receive from these mining operations? Well, if we're considering that Bitcoin is 90,000, that's one factor. The other factor is we want to consider that we want to be conservative about our projections. Now, at the moment, their how should I say, their margin is about 80–85%, and that's when Bitcoin's around 45K. Now, as the price goes up, their margin goes even higher and higher because there's less of that is impacted, or a smaller proportion of that value goes to energy costs and the actual mining activities itself, or the operation costs. So just know that technically the margin would go up as the Bitcoin price would go up, but we're going to be very conservative about it because we want to make sure that we're not, we're trying to make sure that we get a fair return, or we're doing this analysis as kind of in the worst case scenario, I would say. So let's consider they have a 70% margin, which is still really high for any company, but let's just consider a 70% margin. But what you would do is you would get those 13,500 points, you would multiply it by 90,000, and that would be the gross profit, right? The gross amount from mining activities. And then you would multiply that by 0.7. And that would say that you would only get to keep 70% of that profit. And what that turns out to be, and feel free to do those calculations, that's 850 mil. So that would be 850 mil worth of net income that they would receive from mining operations, which is huge. You can see that that's double, essentially double what their current book value is. So that's essentially they would be triple their size, right? Just from the mining operations. Another factor to consider is that they have roughly, once again, half of their assets in Bitcoin. So that's 200 mil in Bitcoin. So if they were to appreciate from 45,000 to 90,000, then that 200 mil would increase to 400 mil. So I'm not going to include all 400 mil because 200 of it's already counted. So I would just add the extra 200 mil in appreciation of Bitcoin, right? That's what exists on their current balance sheet. So now we could see that in general, their added assets should be the 850 mil from mining operations over the next 2.5 years, and also just from appreciation, an additional 200 mil. That's a little over $1 billion, $1 billion, $50 million, so 1.05 billion, right? So I just went ahead and did that conversion just for simplicity. And so you could see that its projected book value in 2025 is its current book value of 400 million, plus the added assets over those mining activities and also appreciation. So that's 1.05 plus 0.4, and that ends up being 1.45 billion, right? Or if you want to do it in millions, then that's $1,450,000,000. Now that we've kind of went through those numbers, feel free to, look at my analysis and tell me if you feel that any part was perhaps too conservative or too lenient. Feel free to comment below, and I'm happy to discuss it. But let's now carry over to what these side-by-side comparison values should look like. So I believe that the book value, once again, based off of these calculations, should be $1,450,000,000 dollars, right? Or 1,450 million, right? So you could phrase it however, but it's essentially 1.45 bill. Now, that's going to be roughly over triple the existing book value, which is great. Now, with respect to Hive's market cap, this is where it gets a little bit different. Now, if we look at its history, we can see that generally speaking, the market cap of Hive has been incredibly high. It's only at this time at the moment, a lot of the Bitcoin miners are being priced under their book value, that they have a price to book value of less than 1, which is pretty much unheard of in general, unless you're a company that's going into bankruptcy or you're losing money, right? If you're in a really bad state, then of course you're going to be selling. Then it stands to reason that you would be under a book value of 1, because each quarter you should be losing money. But this is not the case here with Hive, right? They're consistently earning money each quarter, and they're consistently positive, and so that's for that reason it doesn't really stand to reason that they would have a book value under 1. If we look throughout the past year, you could see that those were instances where it was perhaps very likely overpriced. There you could see a price to book of 26. So there it's being, so you can imagine if your Kelley Blue Book car is 10,000, here it's 260,000 you're paying, overpriced right here at this time. When it was 20, overpriced. When it was 7.5, overpriced. 3.8, there's an argument to be made that a price to book of about 3 or so, that's pretty fair. Generally speaking, a price to book of about 2.5 for the industry, that's going to be, pretty safe, pretty reasonable. If you look at price to books of other companies, let's say price to book, and then I'll go to, let's say, like Facebook, you can see that they have 4.3, makes sense. Let's go to Amazon, price to book. You can see that they have a value of 9, right? So it's not unreasonable to think that in the future, the price to book is going to get to 2.5, right? That's essentially the assumption that I'm making. So at a price to book of 2.5, where it's no longer undervalued, but reasonably priced, then what we have to do is we have to multiply our book value by 2.5. So if you multiply this value by 2.5, that's where you get $3.6 billion as its market cap. $3.6 billion. And this is really where it falls in line with the stock price. So these are where you can do the comparisons directly with the stock prices. You can see that with today's prices, it's being valued at about 350 million, increasing to about 3.6 billion. That's a 10-fold increase. Now, of course, there might be some dilution that comes into play, so it might not be exactly a 10-fold increase, but I could feel confident to say that, for personally speaking, just this is my own advice, and this is why I perform this type of investing, that these undervalued Bitcoin miners could easily see 5 to 10 times their increase in share price over the next 3 years. And so that's one reason why I think it's a better investment for myself to purchase shares of Bitcoin miners than simply Bitcoin. Because if it were to increase by this much in terms of Bitcoin appreciation, you would only get twice your money. Versus if this same scenario were to play out with the miners, you would be looking at 5 to 10 times an increase on your investment. So those are essentially my projections. Now, some other things that I just wanted to highlight was, what do I believe its net income would be? Well, in this case, I'm just assuming that they're not essentially scaling their operations. They're keeping it at about 450 Bitcoin per month. That's very conservative, considering that they're planning on continually acquiring and deploying new machines. And I believe they have plans on increasing their exahash by another, I think it's 2 within the year, within the next 6 months, 2 exahash. I have to look over those numbers again, but that's a dramatic increase in the number. We may be looking at potentially over 500 Bitcoin a month by the end of the year. We'll have to look at what those numbers are. But once again, these are just conservative estimates to show why I believe that it's pretty confident to say that over the next 3 years, you're looking at 5 to 10 times, or I'm looking at 5 to 10 times my money if I plant some and plant some money into this stock, or similarly priced Bitcoin miners. Now that being said, the last upside of kind of going into stocks over directly crypto miners is that you can hedge. And so a way to lower your risk is essentially selling some covered calls on here. If you haven't watched my previous video, essentially this year I'll be making about $30,000 of what I like to call rent or premium off of people who are buying my calls. Feel free to check that out. But that's just a way that, even in a bear market, you can kind of protect yourself from, significant losses. Because there were a lot of people who's, I imagine if you're watching this video, that perhaps unfortunately you may have your portfolio down maybe like 50%, maybe as high as 80% of what it was previously. And so that's, that is a rough state to be in, but just know there are ways to kind of hedge risks. Once again, this is not financial advice. This is just my own personal opinion. Always make sure to do your own due diligence. One added thing about covered calls is that while they are really nice, they're also not magic. There's also some downside, and that's if, let's say, for example, Bitcoin were to take off and these Bitcoin miners were to also just dramatically take off, and you would lose some of that upside, right? So you would, depending on how much it goes up, but you lose anything past the strike price. So that's just one thing to consider. I don't mind. I always set a strike price that's really high, or that's higher than what I bought in at. So I'm fine with that. I'm comfortable with that. But it's always up to, depending on your investment strategy, what you would like to do, that's what you would choose to go with. But I hope that made sense. Please let me know if you, agree with my sentiments, or if you perhaps have an opposing view. I really appreciate your time. Thank you so much for watching. And if you haven't already, please like, share, and subscribe. I hope to see you soon. And have a great day.